Well, hello again, ladies and gentlemen. Happy Friday. It's me, Omar Bam, aka Crypto, and it's really nice to be back here with you covering what is going on in cryptocurrency today to keep you informed and on top of things. And man, did we just hit a critical moment. I think there are quite a few critical moments, but near term, this has been a big one. The breaking of Bitcoin 21,500 has succeeded and is coming through with force. So we're going to be taking a look at that, looking at the chart, seeing where the next resistance is if we haven't broken it by now, and just talking about the daily news. So I encourage you to hit that like button if you're new to the show. Please subscribe and leave a comment down below. Thank you, Skynet, for letting me know about the weird clipping that was going on in my last video. If somebody can let me know if there are weird irregular clipping things that happened today with the microphone and volume, that would be super helpful. I did some changes to try to fix that, and hopefully that's resolved for the betterment of all. But we're going to go ahead and get started here right now. Thanks for joining me live, Mr. OP22K. We're already there, huh? Let's go. Gortra Bot, Justin C, Josh Davis. So nice. And who else was? Yeah, Gortra Bot again at the top. Thanks for the first comment. Let's get started here. Here we go, guys. So you have Bitcoin, just refreshed this right now at $22,196.20. This was a stupendous move that just happened right now, right before I went live. I was monitoring this for the last few hours, getting the show ready for you guys, and really thinking that we had to kind of settle with the price for the day. But no, it's like I've said, volatility appears to be back on the table, and bullish volatility, the best kind, I think, for most people. I think would agree. That is a delicious kind to be back right now. You also have Ethereum actually ahead a little bit more of Bitcoin, keeping Mr. Ratio happy, as you can see at $1,641.51, up 5.3% versus the 5% for Bitcoin. Although Bitcoin is up a little bit more on the week, up 17.6% versus Ethereum's 15.8%. And Bitcoin has surpassed a $420 billion market cap at 425 million to be exact. Ethereum, I'm sorry, is just south of 200 billion. The biggest gainer, as you can see here on the front page, top coins, I guess you could say, is the number 11 spot, Solana, up 12% right now. So yeah, this is what we're looking at. We have a situation where Bitcoin has technically, according to TradingView, actually gone into the strong buy territory. We were looking at it and it was just at the buy territory finally recently. Now it's already in strong buy territory. So I guess it paid to stick around during the bear market and maybe be accruing if in fact this proves to be quite correct. And that is what it looks like to be happening, that we are in fact flipping overall bullish. And it's coming with strength, like I've expected, that there's been money sitting on the sideline. And when the bull market got started, if that's what's happening, that it would happen as a real show of strength. And it appears to be like every pullback is being fiercely bought. And the pullbacks that have happened recently have just not been very strong. There's been a lot of buying that's taken place on all these pullbacks. So the sell-offs have not been intense. That seems to be seller exhaustion, bears being a little bit more scared here of taking a position in that direction. Thanks, Gortrabot, for the tip off on the microphone right now. Hopefully that continues to be the case. It doesn't get weird. But yeah, I've noticed as I was sharing the other day, 22,500 was what you should have been looking at to breach, and that just happened as it hit $21,500. As it hit that number just, I don't know, half an hour ago, it suddenly exploded higher and has continued to do so. We haven't had a real candle lower since that point. Bitcoin looks like it wants to go straight for the next resistance level. I actually drew this line back then when it first breached it for you guys to try to show you what that would look like. And it does appear to be about $22,500. It hasn't breached that just yet, but that's probably where we're going to be looking for. I wouldn't be surprised to see it pull back and create a support level at $21,500. And it would be range bound between $21,500 and $22,500. So that would be because of this line here. Basically, you can see this go all the way back here to this correction back in June of 2022. It seemed like it pivoted around 22,500, that range, maybe a little bit higher, a little bit shorter. It's been trading there as a critical moment at a lot of different data points. You can see one there. You can see one in July, around July 7th. There was a point that it hit that. You can see a reversal that happened here on July 18th, is it? You can see that it corrected on July 25th, I'm sorry, went down. It went bullish around July 27th, all around 22,500. You can see it being hit many, many times here. It basically confirmed further downside on August 19th. And it was probably the most recent high that we have seen around September 13th of 2022. So that's really what we're looking at next, I would say. And if we breach that, I think skies are pretty much clear. It's hard to exactly guess, but I would imagine we could see $25,000 being a real critical point once we breach a 20. Yeah, I don't know, 22,500. It looks like to me 25,000 is a lot more in the cards. From there, we get a lot higher. Actually, we get up to like $30,000 and beyond that. So sky's looking more and more clear. Shorts are becoming a little bit more concerned here. It's been a winning strategy to be short for a very long time here. There's been a lot of profit to be had in that direction, but that is a bet that is seeming less sure and less sure, considering the comebacks that Bitcoin often does. It's better to get out of the way of something that is truly disinflationary rather than stand in front of that train, as I've said many times throughout the years. Anyway, can you tell your boss to get lost yet? Nah, that we do that at the top, Eric. That's what we do at the top, and then we regret it. It's usually good to have a job actually for the bear market, so you can have something to accrue to dollar cost average into, right? And at the bottom, I mean, I guess, but I don't know. I don't think we're going to be hitting $60,000 anytime soon, and beyond that, and I guess by soon I mean weeks and months. So I don't know. Maybe you have enough to last for the next year or two. So be my guest, I suppose. Eric. Anyway, total hash rate for Bitcoin has climbed a lot here. I'm just laughing at Peter Schiff. Continues to call these rallies like fool's gold, errands and stuff like that. These bears always get it wrong. Jim Cramer, Jamie Dimon. This is the kind of stuff we see at the bottom of the bear market. Anyway, yeah, we hit an all-time high for the Bitcoin hash rate. This is it's interesting. It's hard to tell exactly what this means, but it could be a vote of confidence from those who are trying to accrue Bitcoin, even if they're operating for some sort of loss reason because of electricity. Although the break even is actually around just north of $20,000 last that I checked, so it's profitable to actually mine Bitcoin right now. So perhaps that's why they're turning on their mining rigs. But to me, it's a vote of confidence that it pays to try to set up the infrastructure to mine Bitcoin. It's not small-time miners who are pretty much doing this with their miners at home right now, or their Coin One miners. For pretty much the big miners right now are those who have the facilities. They have access to cheaper electricity credits, like here in Texas or overseas. And the fact that they're probably powering up more and more rigs seems that they probably think that it's going to be worth it for the long term to maintain this, to hire for this, and so on. And that the price will likely be higher to warrant such mining. But the mining and the price tends to follow each other really, really closely. Like you can see here, where we had recent lows in the hash rate was December 27th, 2022. I believe we even talked about that here on the show. Did we? I'm not entirely sure, but I remember reading about it. Anyway, at that point, we had a price of 16,842, which were kind of low for Bitcoin as well at that point. So price, it's up to you. It's chicken and the egg, what follows what. As the price is going up, naturally more people want a piece of that Bitcoin, and it makes sense to do so profitably. But just wanted to take note of that, since that's something folks are talking about today. I want to make sure you're informed as always. So it worked out really well for the president of El Salvador. He tweeted this out on November 16th, 2022. "We are buying one Bitcoin," said Nayib Bukele, "every day starting tomorrow." So since November 17th, 2022, the country has been adding to their treasury. one Bitcoin a day. And this is, I think, a little bit better than Michael Saylor's strategy of buying closer to the top, I guess you could say, and still being still net being at a loss as far as I've checked with Michael Saylor's buys of MicroStrategy. So I don't know. Although they've continued to buy too, so he is looking like a giga Chad since he hasn't and his company hasn't had many major issues like you've seen with other companies. For example, Genesis. We were talking about the rumors. Was it yesterday? The day before yesterday? I don't know. Time flies in crypto. The rumors that were coming out that Genesis was getting ready to file for bankruptcy, and that has now taken place. They're, according to the interim CEO, trying to get this bankruptcy to be efficient and as quickly done as possible. So they have a plan whereby they hope that even unsecured creditors, just like those average people, retail who deposit into Celsius, where those kinds of folks might even get their funds back to some degree, or have some funds back, I guess you could say. It's looking like that's still a matter for debate whether that's going to be happening with Celsius customers. But anyway, at least with Genesis, it could be good. They've been having all sorts of problems when it came down to hedge funds that went down, like Three Arrows Capital or even FTX. So FTX owed Genesis $226 million. So since FTX is facing their own insolvency issues, that has likely led to contagion to companies like Genesis that have had their own failures, like this one you're seeing. They owe quite a bit of money. It's being called a mega bankruptcy event by CNBC. Actually, I had read in another article, but this is CoinDesk. So Genesis owes over $3.5 billion to its top 50 creditors. They have between $1 billion and $10 billion in liabilities, as well as assets. So they owe, for example, Cumberland, Mirana, Moon Alpha Finance, Donut, some DeFi protocol, Vanex New Finance, Income Fund. There was this spreadsheet being shared on Twitter. Unfortunately, I didn't pull it up right now, but a lot of it is redacted anyway. It has a list of the creditors that are owed money from Genesis. And yeah, you can see that likely what's going on there with the redactions is that they're probably companies linked to DCG, Digital Currency Group, which was the parent company of Genesis, that is trying to like distance themselves further and further from Genesis. But anyway, that's pretty much what's going on here. This restructuring process, as I mentioned, could lead to paying unsecured creditors, yada, yada. Just the latest downfall that you're seeing in cryptocurrencies. Oh yeah, this was the CNBC article right here. I believe this was the first one, that the major one that had come out in relation to this. The Winklevoss twins and their input being talked about as well on Twitter. But yeah, just basically a confirmed rumor that they were going to be going down. And I think it is good that they might be getting funds back from a lot of different entities that owe them money as well, so they could potentially have that money back for creditors. Anyway, I thought this was interesting. This was shared by Ryan Watkins. I think many of us suspected that a lot of folks who entered in the last bull market entered into crypto kind of thought of crypto as NFTs and NFTs as cryptos. There was really no difference between the two. They didn't really get that diversified into other things. It maybe was their first exposure into something like Ethereum or Solana or whatever have you, because they had to sell their NFT for one of these other cryptos. But really what they wanted was fiat at the end of the day. But they were more interested in NFTs. And that was a lot of my suspicion as well, is that they weren't really getting into crypto. They were getting into NFTs. And this is being shown, I think, exemplified by this chart here. This is really, however, just DeFi versus NFTs. But it's interesting because you had DeFi really starting, I guess, some of this. A lot of folks in the summer of DeFi that took place were only talking about DeFi. NFT wasn't a big thing. But when NFT started to blow up, the first transaction that took place in 80% of wallets was related to NFTs versus DeFi. You can see interest in DeFi for new users was just, I would say, I guess it wasn't non-existent. It was somewhat existent, but NFTs was the main thing in people's heads. This is what Ryan Watkins had shared. Intuitively, I suspected NFTs became synonymous with crypto for most new users in 2022, but this chart from the latest Electric Capital report is impressive. 80% of wallets' first transactions were related to NFTs in 2022, far outweighing DeFi. Make of this what you will. I think in the next cycle, things are going to be somewhat different. There have been lessons learned from NFTs, but at the same time, since NFTs are so synonymous with crypto, maybe when people do get back involved, it will be again through NFTs, but hopefully it will be through a different lens since so many NFTs just resulted in people losing money, buying things that they thought without actually putting two and two together or doing any sort of critical thinking. They just heard NFTs were a good thing to buy. They bought some and they thought they were going to go up. Didn't really work like that. You had to really look at the right collections, look at what other bidders were trying to upbid. It was a complicated thing, especially for new users who maybe didn't even understand finance a great deal. They just didn't want to miss out on this whole NFT thing. So everyone I know was talking about it. Just like I remember ICOs back in 2017. But they didn't really fully grasp things. So hopefully I don't know. Retail feels like they always lose here. I've tried to help retail for a long time, but it's like a losing battle. We play our small roles, I guess. Anyway, this is an article that's coming out right now talking about trouble in Ethereum. Devs divided over staking withdrawals and Shanghai upgrade. Some of the network's architects have expressed concern that the upgrade is launching too quickly for fear of public pressure over staking withdrawals. So there's about $25 billion worth of ETH that is locked up in a staking contract that has happened since the merge for Ethereum. Coming down the pipeline in the Shanghai upgrade for Ethereum, there should be the ability for the withdrawal of that ETH that is staked. You stake that ETH and it gives you the ability to validate the network and get the opportunity to make sure everything is fine. There aren't cheaters, and the opportunity to do so, you might get rewarded in some ETH. But in order to do that, again, you have to stake some ETH, lock it up in a node, or lock it up in somebody else's node, let them do the verification. They earn the rewards. They divvy it up to you. Yada yada. But that ETH hasn't been withdrawable. In some cases, you can get an IOU for the ETH that you have staked. For example, with Coinbase, you can generate this Coinbase ETH, the CB ETH token, and with that, you could sell that, but it's not exactly ETH. It's like an IOU. People are willing to buy that IOU because it gets the reward that Coinbase is mining and ultimately will divvy up. Hopefully that gets reflected in the price and will be redeemable for actual ETH after the Shanghai upgrade. But there are many others with, for example, accounts at Binance who don't have the ability to convert their ETH that is staked into some sort of redeemable token IOU, and therefore they're eagerly looking forward to the Shanghai upgrade to withdraw if they want to withdraw and not be forced into hodling into the next bull market, which might be the best thing for them to do in the first place. But anyway, so there's this upgrade that might be beneficial to Ethereum to integrate. It's been talked about being integrated, and it might be beneficial to integrate that before the Shanghai upgrade because it might mean less technical debt in the future, meaning having to integrate that upgrade in the future, which has to do with encoding. For the network, it's called Simple Serialize, or SSZ, a flexible, modern encoding method described by developers as the future of Ethereum encoding. Instead of using SSZ, Ethereum is possibly going to be sticking with recursive length prefix serialization, or RLP, an existing encoding method that may eventually be phased out and retired. Keyword there being may. It's not locked in that Ethereum is going to be moving from RLP and into SSZ, but it's been apparently expected that Ethereum will be doing that, but that's probably a matter for future discussion. But it might again be beneficial to implement this new encoding method now rather than having to deal with issues that might happen with incompatibilities, potential exploits between when Shanghai happens and withdrawals are allowed, and don't integrate that new encoding method, and potentially the upgrade that next comes, which could include that upgrade. And in that lag time between, that could create problems because the blockchain will have this encoding taking place, old encoding. Eventually, we have the new encoding. And now we have to figure out how to figure out the two for the future, and make sure that they're compatible. Again, no exploits. So better to integrate that future fix now, right before the withdrawals take place, and not have to deal with that. But that could mean, according to some developers, a 3 to 4 week delay. And since Ethereum had so many delays in the past, it seems this article is trying to say that others might not, the 25 billion bucks that's locked up there, might not want to delay again because it looks bad, because they had to wait so long already just for the merge to take place. But from what I'm seeing, I think the majority of people on social media, and maybe it's not the case that social media is the same as real people, but it seems to me that most people on social media that are following the situation are saying, no, make sure things are done properly. Let the developers do what needs to be done. If it means a delay in order to implement this, and let's go ahead and do it. But at the same time, the other side of the coin is maybe SSZ, or the new encoding protocol, I guess you could call it, shouldn't be integrated into Ethereum at all. And that's a future discussion. The reason that hasn't been discussed yet is because that's just not been on the roadmap, the direction that things need to be going or whatever. But maybe, I guess this is the call to actually discuss that now. Could mean delays, but I think that would be fine for people. Maybe it is important that that discussion takes place now rather than later. But as I'm saying, most people, I think, do agree that developers should be taking their time and not rush out things just to make certain people happy, or a certain cohort of money that knew that there would be risks in locking up ETH in a staking contract, and there potentially could be delays. And who cares what the maximalists say? Because they're always going to throw some sort of shade and so on. But anyway, if this is drama, if it seems like drama, it's probably not very much. I think that's why it's not reflecting in the price. And as I even said yesterday, the Genesis news wasn't going to impact the price. In fact, we got a bump up in price today. It's important to take note of when the news cycle, bearish news is not impacting prices to the south side. That's usually a bullish indicator, by the way. But anyway, Tim Bako had this to say. He's someone who helps coordinate a lot between developers and public outreach, public awareness, and things that are published about what developers spoke about or what is going on with Ethereum. So Tim Bako wrote this on Twitter in relation to that article on Decrypt. I guess it's a good sign that not much is going wrong to see Ethereum FUD articles bringing up data encoding technicalities as the big concern. Yeah, yeah, yeah. It'll get worked out. It'll be all right. At least with Ethereum, right? You will eventually get your money out. Probably. I mean, this is pretty much nearly done, the staking contract stuff. But when it comes to some of these bankruptcies, who knows when you'll see that money? Trust the code. Anyways, Moody's, to finish up here and begin getting to our end of the day, week actually here in crypto. Moody's has downgraded Coinbase, saying the outlook, however, is stable. So what they did was downgrade the corporate family rating for Coinbase, all these different products for Coinbase, and also the guaranteed senior unsecured notes. So we're not necessarily talking about the stock here, although it might be related, I guess, somewhat. So the ratings agency cited challenging conditions in the crypto asset operating environment. Sudden tightening of regulations and related oversight could have a credit negative impact on Coinbase's revenues, as well as increase its cost base. But let's be real. It's this bear market that's been roughest for Coinbase, and things could very easily turn around. So maybe getting stock in Coinbase now would be a better thing if things do turn around, because that does drive a lot of Coinbase's revenue. They did have to lay off staff. This was something that was noted here, just like many other companies, in order to stay lean and mean, considering market conditions. But I'm sure things will eventually turn around for Coinbase. It says here, however, if Coinbase's liquid position rapidly declines, fails to return healthy cash flows, encounters an unfavorable regulatory environment, or incurs significant regulatory penalties, it could lead to additional ratings downgrades from Moody's. Ooh, scary. This is of note actually. Look, check out this disclaimer here on the block crypto. Beginning in 2021, Michael McCaffrey, McCaffrey, yeah, the former CEO and majority owner of the block, this site, took a series of loans from former FTX and Alameda founder Sam Bankman-Fried. McCaffrey resigned from the company in December 2022 after failing to disclose those transactions. It probably seemed really cool. Oh, yeah, I can take loans from this guy. He's real hip, man. He's giving me a really good interest rate. He's a real bro. Turns out he was stealing that from his exchange clients, quite likely. Ah, man, ethically, that must hurt, man. Choose your friends better, I suppose. Anyway, thank you guys so very much for joining me. I think it would be nice to get continued bullishness, but it seems more and more like we don't have to hope for it. It's happening, guys. It's happening. And thank you for for sticking around and being with me through this bear market again while we get ready for the next cycle. Please be sure to share the show if you appreciate it with those who might enjoy it as well. And stay tuned because I think it's going to be a fun ride together. Here's our quote of the day as we head into the weekend. I think something to consider here. Ego is like dust in the mind. Without cleaning that dust, you can't see anything clearly. Take care, everyone. Much love and stay cryptic. Peace.